It's a pleasure to welcome everyone on behalf of the Crypto Valley Association. My name is Emi Lorincz. I'm on the board of the CVA, and in my daytime job, I work for Ledger's B2B arm. So many from the community and the members have asked about staking, an event on staking as a service, because just looking back the past quarters, there have been more and more proof of stake chains, proof of stake protocols showing up. And I believe that because we have many ecosystem players and members of the Crypto Valley Association who are playing an active role in staking as a service, we are going to dive into that with BlockDaemon and with Bitcoin Suisse, with Edge and Node, and with Kraken. And in the first part of this session, Konstantin, I will hand it over to you because you're going to share a bit about the current hype and also what you guys do at BlockDaemon. So over to you.
Yeah, thank you so much. And I'll try to keep this very brief and informative for everyone. Let me make sure I'm screen sharing correctly. Here we go. You should be able to see the screen, I'm assuming. Okay, great. Now, I kind of changed the name of this presentation. Sorry, just briefly, mostly because when we talk about staking, really what we're doing, we're talking about economical network protection. And so staking in its most simple form is an economical system tied to a technical one that allows for network integrity to be managed over time. And I'll talk briefly about it. I'm the CEO and founder of BlockDaemon. Just as means of introduction, we're the largest independent node operator in the world. We run 5,000 full nodes for financial institutions to send transactions to crypto networks. And so we provide high availability API infrastructure. So exchanges, custodians, financial services companies can hammer transactions through blockchain networks without being impeded by the inherent network complexities and chaotic nature of those networks. We also run around 500 validators across 20 proof of stake networks. We're normally a white label provider, meaning we often you don't know that it might be us who runs a node. We allow for people to name the validator, and we run it on their behalf, and we run public BlockDaemon validators in the network. And so we're fairly adept in part automation, part manual processes where security requires it to run nodes with very high SLAs, insurance, and ISO certification, et cetera, et cetera. And so when we talk about staking, so I'm going to touch on these four little dimensions here. Staking as a service is a use case. The emergency of staking as a service, quick dive into some historical dates, reasons to believe in staking as a service, and early adopters who currently are in the space. So I'd be fairly swift. Current hype, ultimately, in a simplistic way, and feel free to read through this and we'll share those slides. The big thing is, great example currently that's being had is around Bitcoin's energy consumption, and we're abstracting away a lot of complexity here. Proof of stake secures networks not by compute and energy power, but by value, which means by delegation of tokens connected to nodes. And the more tokens are connected to a node or delegated to a node, the more powerful the node is in the network, and it gets to decide what blocks and transactions go into the network. So rather than having a compute exercise that by definition becomes more complex and energy consuming over time, proof of stake is purely based on economical reputation of the node participants, which is measured by most networks amount of stake that's delegated to these networks. And so for companies like us, for example, when someone wants to, large institutions want to delegate to us, we actually sign contracts with them, we offer insurance, et cetera, et cetera. And so when they look at the different list of potential nodes to delegate against, they will do due diligence, and our reputation is really what makes people choose us over others, mostly. On the fee side, you'll find that prices tend to converge to the same. I don't think they necessarily go down, but obviously a lot of this is public information. And so the prices are fairly consistent. That's often not a huge differentiator. The differentiator is the adjacent services by staking providers. But so SaaS is low risk and low energy consumption. And because it's so staking as a service here is SaaS is an unfortunate abbreviation of the said term, is a really interesting economical tool as well. You have to think of staking networks as bonds financially. And so when the treasury in a country submits bonds, ultimately they take liquidity out of the market for a fixed yield, and staking networks do the same. And so the whole concept around staking is that the network wants to lock in liquidity for a particular yield over time. And so for the physical network or protocol foundation, often it's a very economical means to also manage demand. And so there's a lot of different statistics that go into staking yields. One is the minimum staking requirements per node, the total amount of tokens that are staked, all will indicate, what percentage of yield people can earn. And because it's fun and macroeconomics and interesting, speculators love that type of area. It's an area where inside knowledge can create a lot of alpha. And so there's always a strong speculator interest. VCs specifically have pumped a ton of capital into the ecosystem by pre-purchasing tokens at discounts. And then, ultimately, there's a lot of room for derivative products as well on top of it. And so the current hype is really a factor of these networks technically going live, a lot of capital physically going into these networks, and then the joy and fun of fast growth or decline that comes with it. So there's definitely a very strong speculative part to this at this current moment in time. These networks will become a lot more stable over a longer time period, right? So once you start to have derivative products, you have lending functionality, and probably in 5 to 10 years, the volatility will be a lot less. But in the first couple of years, normally these networks see a ton of volatility. Historically, proof of work, obviously, we've touched on it, was the first sort of big mechanism in validating transactions on blockchains. Proof of stake is sort of generation 3. And so there's a couple of examples here if you're not familiar with it. Cosmos genuinely, I think, is the largest early one that was around. There's been a lot of great work done by those guys that a lot of the other protocols learned and leaned from. The larger ones now that you hear a lot about are Polkadot. And then there's really the big thing that's the elephant in the room here is ETH 2.0, because it is traditionally a proof of work that's migrating to proof of stake. So perfect example of what I'm talking about is you have the second largest cryptocurrency migrating from a proof of work mining and minting service to a proof of stake service, proof of stake economical system. And that will be a huge inflection point to our industry, because Ethereum at this point really is seen as a sort of fairly standard asset besides Bitcoin. And the liquidity and volume required for Ethereum means that for the first time, rather than starting a new proof of stake network from scratch, we're actually switching a network that already has enormous liquidity, an enormous ecosystem, enormous DeFi functionality available. So it'll be an absolute super GAU of an event. If you're into predicting also the economics behind it, it's a lot more complex because there's a lot more history there. The main reason why Ethereum is doing it is ultimately, there's really two factors. One is energy consumption. The other one is speed and ability of the network to reach consensus, and to actually validate transactions will also increase over time. So there's an interesting other component to it. Let me see. Oop. Okay. So yeah, so there's different folks in this ecosystem. There's crypto exchanges, and apologies to Brian for naming Binance here. We should have referenced Kraken, obviously, since they're part of this. I'll make sure to rectify it. Kraken is actually a great example of an exchange that allows people to earn yields. That is actually also a bank and fully regulated. And so, you know, compared to a Binance, maybe as a sort of shout out here is Kraken is a crypto exchange that people can hold assets in and also earn interest on these assets without having to run their own nodes, without incurring any of the risk. Ultimately, that's associated to proof of stake networks. There are institutional crypto asset custodians. Fireblocks, one of our partners, for example, is someone if you're that also offers custodial services. You can host your tokens there and then earn yield. You can't trade your tokens. So one of the fun things that something like Kraken does is liquid staking. So you can actually hold tokens and sell them and earn interest with institutional assets normally that are sit on custodians. There's a hold period to pull out assets, different use case for different folks, might have different return rates. There's venture capital firms, blockchain, great example, there's a bunch of them. They buy tokens, they hold enormous amount of power in these networks. They are normally early investors. So think of them as seed VCs in these protocols that can wield a ton of influence. Specifically early on, when a network goes live, these guys will onboard their token holdings onto validators. Those tend to be very important in the network. And over time, you see that filter out. And then there's guys like us who provide staking infrastructure, right? And so we're a non-custodial company. And so we try to work with you know, all the different categories of companies you see here to actually provide the core level node infrastructure and validators, right? And so all of these entities might or might not decide to run their own nodes. They might outsource. The stack composition looks very, very different. And so the biggest thing absent here are the actual foundations and protocols. EdgeNode, and Tegan is here as a great example of actually an entity that's, you know, super active, obviously, in the space, and someone we actually treat like an institution. We see them as a potential customer, and obviously they're kind of think of them as the Treasury and Federal Reserve of a protocol, right? And so they look at the health of a network holistically. They might use funds to stimulate certain activity in the network, to solve certain problems in the network where they feel like, hey, there's technology that would aid the well-being of the foundation and the network. We'll pay someone to build it. And so they are a very important stakeholder in it. You know, what's kind of fun about it? First one, I'd say, it's actually not really correct. Consistent yield. Yield is not really consistent in the sense of like a bond necessarily. As a derivative product, it can be. But yield actually is normally calculated by each protocol a little differently. Some protocols also reward certain node behavior over time. And so there's different indicators that make for good yield. And so we shy away from guaranteeing yield, for example, mostly because there are also factors that you can't control, which is how much tokens of the total free amount I actually stake to a network might indicate the yield, mostly because if enough tokens are sucked onto nodes, you have limited liquidity. Yield might go down because the protocol foundation might want to have more liquidity, for example. And so there's a lot of factors that make this inconsistent. But obviously, you know, there's also the other side of it, where something like ETH 2.0, economically, when a small fraction of tokens is connected to nodes, you can make you can make 15-20% of yield. And so it changes. The barriers to participation are low compared to mining, which is true. You can just hold tokens and delegate to a particular validator in these networks. So it's a very, very short on-ramp to really kind of a DeFi type of product, or actually, it's actually probably the wrong term, but it allows you to earn yield on tokens, even if you hold a small amount, without incurring a lot of risk, depending on the validator you choose. There are slashing, is a scary big word in proof of stake. when nodes misbehave, certain things happen. A lot of networks carry the risk of punishment, and the punishment is normally given out by the foundation in respect to the danger a fault in the node has created in the network. So, you know, the largest ever slash we've seen was a 5% slash on Cosmos for a double signing event. I sometimes feel it's a little bit like, you know, when we take off our shoes before we board on a plane, something bad happened, and it creates obviously a lot of panic by people, and like, hey, 5% of all tokens is a lot. If I have 10 million bucks, that's $500,000. It scared away a lot of institutional investors initially who legally can't put their principal at risk. So for example, you know, they invest in a network as a VC, and if there's a huge risk that you might lose your principal tokens in an unclear amount, legally, often some of them choose not to participate in these networks. And so the community, the foundations, companies like us have worked really hard to provide insurances and limit exposure to some of the larger providers in the space in order to have a healthy network setup. And so, you know, there's ways now to do this without risk, and the quality keeps on getting better and better. And so, yeah, and so I'll stop here. I feel I've talking for a long time. And so, yeah, so thank you so much for listening. I'll stop screen sharing. Oh, and I think there might be questions, I think.
Yeah, that's right. First of all, clap, clap, clap. Konstantin, I found that very informative. And please, everyone, do ask questions. I see that Brian already answered one, and there is one for the panel for later. So we keep Dercia's question for later. I love that you touch base on slashing as well, because I also do have a question or two later to that. And
Sure.
let's transition over to the panel. There is no specific question here for
Great.
now, but I'm sure you will get later questions. So we are going to dive into the nitty-gritty of what our guests are really doing when it comes to staking. And I would love if all of you would introduce yourself and just say that how were you involved in staking as a service, and what is what you do, what is what you're passionate about in or field. Tegan, can we please start with you?
Yeah, absolutely. My name is Tegan Kline, and I am the co-founder and business lead of Edge and Node. We're working on the graph. And so my passion really lies within the crypto space. It's really consumed me. But I think more deeply just in creating a new internet and new financial system, and really kind of empowering individuals so that the value that they bring can be compensated commensurate to that value, which I think in kind of the traditional space where there's a lot of centralized intermediaries in between that can get lost. And the graph is a protocol with a work token. So within the graph network, you can actually stake tokens, which BlockDaemon is actually an indexer within the graph network, along with many others. And so as a delegator, you can actually delegate to those indexers.
Thanks so much. Fabian, you want to go next?
Yeah, thanks so much for having me. My name is Fabian Hetiger, and I've been since 8 years, since 2013, a co-founder of Bitcoin Suisse. And my current role is head of innovation at Bitcoin Suisse. We first got involved or heard about the concept of staking in 2014 when Vitalik Buterin and Charles Hoskinson and Gavin Wood moved to Zug, Switzerland, to do their Ethereum crowd sale. And these days are still very early days. And in 2017, we assisted the Tezos ICO in their $232 million US crowd sale. And there we had demands from our clients to stake their Tezos, which they bought through us. And we built a product for staking. And in August 2018, we then launched a staking Tezos product and built a great team of individuals to further support the product. And yeah, so at the moment we are 250 people and several business lines, brokerage, custody, and one which is growing very rapidly is of course the staking product. Yeah, thanks.
Thank you so much. Brian, you're up next.
Hi, I'm Brian Hoffman. I'm the crypto platform product lead at Kraken. I'm going to do like typical crypto natives do, and I'm going to try and one up Fabian and say I've been working in this space for 9 years, not just 8 years. No, but yeah, mostly working on the open source side. I ran a project called Open Bazaar for about 7 years and started a company called OB1, working on that. And I recently joined Kraken at the end of last year, and I'm really excited to be there and able to take the massive resources we have at that company and really work on expanding beyond kind of traditional centralized exchange business, really working hard to take my background and embrace decentralized applications and protocols and figure out ways we can work better together. And I think staking really touches that pretty significantly. So I'm glad to that you guys invited me to talk today.
Fantastic, pleasure to have you, and lucky Kraken also to have you. And Konstantin, do you want to just chime in? What did you do before being the CEO of BlockDaemon?
That's a good question. So we started BlockDaemon around 3.5 years ago, really to kind of create a mixed blend of a Heroku / a hybrid cloud offering for crypto nodes. And prior to that, I had really a SaaS platform entrepreneur. And the decade before, I've had a few different platform businesses, which taught me how fun databases are and how complex network architecture should operate. And that was sort of the delta between that and what I found in sort of 2017, when I started running some nodes with friends, was what ignited the desire to start BlockDaemon. I've been in the space probably for 6-7 years actively as an advisor and kind of sort of hustler. The crypto space obviously is fairly incestuous, and I've always worked on different projects. I've been in Bitcoin, I guess, since 2012-ish. Not enough to be significant, but had enough to start BlockDaemon. So I've always been super interested in it and been putzing around for a while. So yeah. And I started actually interesting. Well, I don't know if that's interesting at all, actually. I'm originally from Germany, and I started in telecommunications. So my first love was mobile networks, which actually, I don't want to bore people, but mobile networks actually have a lot of similarity on network complexity to decentralized networks, because there's a lot of different hubs in a mobile network, like you have nodes, for example, and you need to interconnect them and blah, blah, blah. But that's where I learned a lot of the stuff that I can also now apply at BlockDaemon.
Fantastic, thanks so much for sharing. So in the preparation or with the questions for the panel, I looked more into Edge and Node and the graph, and if you could share a bit more, Tegan, that what is the relation between the two? I figured that Edge and Node is the team behind the graph, and then also that, for instance, if me as a delegator want to maximize the use of the graph network, like how do I do that? What's in for me?
Yeah, so progressive decentralization has always been the goal. So at one point there was just the graph, and then with the launch of the Graphs network in December, the graph became this decentralized protocol that kind of everyone owns and no one owns, that's making open data a public good. And with that, we kind of rebranded to Edge and Node. And Edge and Node is one of the many companies within the graph ecosystem, but Edge and Node is focused on the graph, kind of similar to like how Consensus was for Ethereum. And so as a delegator, that's a great question. So as a delegator, you can earn passive income on the graph ecosystem by allocating your stake to an indexer. And then the indexers do that hard work in processing the queries, and they share a portion of the GRT, which is the graph token, that they earn with you as the delegator. So I'm actually a delegator. I have spread my delegator across many different indexers. And I think the most difficult thing to do as a delegator is really decide who you're going to index to or who you're going to delegate to. And so each indexer has their own token economics. They have their own, economic model that they set. And so each one shares a different percentage of those fees that they earn with you.
Thank you so much.
And if you like cool logos, then that's a good differentiator. I'm joking.
Excellent. So the next question is, I have a few preset questions, and then we will dive into the audience questions. It's to Fabian and Brian, because you have been around in staking for quite some time, like many or all of you here. But if you could share some metrics that, what is the amount of assets staked to date for your companies, how many assets you stake, also what is the value proposition of your company? Like, why would I rather want to go with Bitcoin Suisse instead of Kraken? Yeah, a few insights would be interesting for everyone.
Okay, well, I don't know which one will go first, but I guess I'll jump in. Yeah, so Kraken, currently we have 8 on-chain assets that we support staking for. And don't ask me to name them. I don't have it memorized, but trust me, there's 8. And I believe we're just north of $5 billion worth of tokens being staked on the platform. This year alone, we've paid out just about $30 million in rewards to our clients, and that's already surpassed all of last year's rewards for our customers. So that's pretty exciting, and we obviously plan to expand the assets that we're offering for staking throughout the rest of the year. So it's going to be pretty exciting.
Fantastic. Thanks so much. Fabian, you want to share as well, please?
Yeah, sure. So we have 7 different cryptocurrencies which we offer staking services. At the moment, it's north of $1 billion which our clients stake with us. The most popular or where we have the largest staking amount is Polkadot, and then it's followed by ETH2 and Cardano and Tezos, and then we're also staking Kusama, Cosmos, and Dash. And on the how much we paid out, I don't have like the full number. In May, it was around 11.2 million Swiss francs. And yeah, we operate our business out of Switzerland, and this comes with quite advanced crypto regulation, which requires a lot of work to be put into. And yeah, that's the main facts.
Thank you so much for elaborating on this. So before we go on with my question to you, Konstantin, about slashing, because you touched base on that a bit, and you said that we are too afraid of this, and yeah, it happened once at a higher stake with Cosmos. So let's just take quickly one from the audience, and I like this one from Nicola. She's asking that, how do you qualify staking from the legal point of view?
Who you're asking me?
Whoever wants to answer this, it's up for grabs.
I mean, I can only talk to, as I said, I think of them a little bit like bond offerings. So from a legal perspective, a company like us, we try to be prepared. We actually have chief compliance officers, security audits. We KYC the biggest chunk of our customer base in anticipation that we might be regulated at one point in time. And so I'm not an expert, but I would say that as a company, we have the policy to always err on the side of regulation. And so we've built infrastructure to allow us to do that. I think when you look at the definition in the US of what requires a money transmitter license, you'll find that staking hits it pretty head on, which is if you offer any technical product that earns yield on a security-like product, you need a money transmitter license. So the jury is out on where that will go. But if you read that definition, you will see that it sounds a lot like staking would qualify for it over time. And so I think but that doesn't have to be a scary thing. I think regulation is helpful. And obviously there's a lot of different territories, there's different ways to handle it. We operate platforms all around the world to reflect on it, but from our perspective, we treat it fairly seriously.
Thank you so much. So when it comes to slashing, then when you what is when you lose the assets due to wrong behavior or if something happens to the validator, as in the validator does something what is not welcomed by the network, then what you guys do? How you handle this? And I remember, Fabian, that you had a really good response to that, or shared the plans of Bitcoin Suisse. So maybe we can go with you, and then with Konstantin, and then Brian, if you want to chime in here, you're welcome to.
Yeah, thanks a lot. So we invested in a lot of smart minds on the IT infrastructure side, but also on our staking experts to do the best to prevent slashing. But on the specific question, it depends what's causing the slashing event. If it's caused by something which is wrong with the network on a global scale, or if it's caused by something where the clear responsibility was by Bitcoin Suisse not being careful. But in general, we assess it on a case-to-case basis, and we're monitoring all our nodes super well. So that's the topics there.
Yeah, and so that makes actually a perfect sense. So that's how we think about it similarly. So as BlockDaemon, we cover all slashing related events. We provide insurance to our customers, and a lot of them are even institutional, mostly because we're actually for most of these networks, because we run such a large amount of validators across so many different protocols, we try to be foundation members of all these different networks and join associations to actually or technical steering committees to really educate and evolve the community around what slashing should look like in order to aid the network. So we're very familiar with the different level of risk involved across every different protocol. And we actually set up insurance funds to cover. We've never had a slashing incident occur. And so it's touch wood, but theoretically, if you like statistics, you do this long enough, you will have one, right? Like, I mean, it's impossible to not. And so over time, and so I think for us, we found an economical way to take that risk off the table for entities that works with us. Yeah, to Fabian's point, there's a lot of degrees to slashing. So there's slashing of like 0.0001%, which is probably the most common for like an uptime related incident, or the validator doesn't respond as fast as it should, but it's mostly very minor. And then there's degrees of it, right? And the hardest one is obviously double signing, which ultimately jeopardizes ledger integrity, which means if you try to push in a faulty transaction, example would be, let's put in a transaction that says Konstantin owns 10 million dots. But he doesn't, but we try to get it in the ledger so that it looks like I do, then that's a serious threat. That's actually criminal behavior very often. And so those are the incidents that the network really wants to protect itself against. And then when it comes to network outages, as Fabian said, that makes perfect sense. We're the same. We don't insure the network. We're not saying, like, if something happens to the complete network, for example, that's beyond our ability, but everything that's in relation to our performance or nodes, we generally cover. But it's a complex game. There's insurance policies now available by some reinsurance companies, and there's efforts in the work. And then, a lot of companies set up their own little balance sheet wallet to cover potential slashes.
Thank you very much. So my next question is on governance, and basically, if there is a governance event or referendum, the weight of the companies, like some of the companies here on the panel, have a pretty significant impact and could determine the outcome of a certain decision. How are you planning to cope with this? And I spotted Alison From's question here, which is it does tie into this significantly, that it says that there is an argument that staking as a service reintroduces centralization do the staking as a service providers think that they have a role in defending and maintaining a decentralized ecosystem? Take it away. Who wants to take this?
Sure. Yeah, I mean, I think, coming from, a company like Kraken, who's single-handedly the largest ETH staker on the entire network, we get this question a lot. Very, very concerned participants. We get it from protocol developers as well. Parity and Polkadot have expressed concerns that we're too heavily involved in the ecosystem, and like, what does that impact to the overall goal of decentralization? I mean, I think obviously we have a business motivation to be as large as we can, but we also don't want to destroy the things that make these networks valuable to begin with. Currently, we don't support the ability for our clients to actually determine votes in governance processes. We want to change that. And so, towards the end of the year, or maybe, just beyond that, we plan to introduce ways for them to actually participate in governance votes. Currently, we pretty much just stay neutral, and we'll just vote abstain if necessary. We haven't had any issues to deal with there on that. But yeah, I mean, I think it does raise some serious questions around centralization. And, I think Konstantin mentioned a little bit about how the protocol, engineers will sometimes try to do different things to balance that out. And obviously new protocols will be designed around any kind of attacks or threats to that model. But yeah, I think the question remains to be seen, and hopefully it stays balanced in the future.
Yeah, that's also one quick thing. We've acquired a company called Looney that actually had a really cool governance interface for Cosmos, really with the idea to sort of allow individuals to participate in governance easily. It's complex because we're really a B2B2C company. Like, how do you pass that on to our institutional customers? But obviously, that's a huge issue. Yeah, I'd be curious what Tegan makes of this, actually.
Yeah, totally. So I think with decentralization, you need some sort of governance to kind of oversee it. Otherwise, it gets super chaotic. And so how we've handled it is, again, with like progressive decentralization. So the Graph Foundation actually has a 10-person governance council, and each 2 people represent a group of the community. So for example, 2 people are from the initial Graph team, 2 people are from like the token holder supporters, 2 people are from the indexers. And so each of those 2 people represents the community. And so their job is to make sure that they're listening to the stakeholders within their section and bringing those voices to the forefront. And then over time, that technical council will likely turn into a DAO and grow much wider. But I think I'm just a firm believer in progressive decentralization. I think if you decentralize too early, it gets a little bit too messy, and it's difficult to, I guess, bring it to the fruition that you are envisioning for the future.
Thank you so much for that, for adding that, Tegan. So the next question is related to something what many of the listeners have. Some of the folks who are attending today are part of proof of stake chains, and what if they would want to list their token on Kraken? I said not only list, but staking could be offered for these POS tokens. What is the process for Bitcoin Suisse and also for Kraken to allowing this, and what are the major obstacles and what is slowing this down?
Yeah, one part is definitely the regulatory classification of the token, and then it's about the client demand. We want to build products which are in demand of our clients, and then we have a lot of opportunity cost because there's so many things, cool things to build, but only a limited amount of people being able to build it. And at the moment, we are scaling up the team quite drastically. So if you're a developer or product owner or staking engineer, check out bitcoinswiss.com/careers. And yeah, we have the ambition to grow and have more firepower to build amazing products. That's the main points.
Thanks so much. And this responds to Christoph's question. Christoph Oberach just asked that what kind of skills are requested to start working in your companies. So one of these skills is dev skills. But then, of course, this is just one type of profile the folks at Bitcoin Suisse are looking at. And if any of you wants to chime into here, if you're recruiting remotely, then
Yeah, so for Bitcoin Suisse, we are mostly recruiting in Switzerland, Zug, but also in Denmark, Copenhagen, where we have an office. And then for us, it's important that the people are excited about crypto and have drive and are good team players. And then, of course, specific on the job, if you're a developer, then you should be a skilled developer. If you're into IT infra, you should be a good IT infrastructure specialist, and depends a lot on the role. But yeah, good team players and really living the spirit of crypto, the decentralization, all of these aspects is super important.
Thanks so much.
Yeah,
and who's not excited about crypto here, right? Sorry, Konstantin. Go ahead.
Yeah, no, one thing I want to say is, like, I mean, obviously, same like everyone else, we're expanding our team vastly on infrastructure in general. I think what I find really interesting as a sort of next evolution of infrastructure is really the interconnectivity of all these protocols, even into staking. So bridging, transacting into networks. And so for us, smart contracts are super fascinating. I think there's a huge demand for people who know how to build complex DeFi type of products cross-chain. If that's something people are interested in, there's an abundance of roles with us, with a lot of other companies, but I think that's gonna scale up drastically. And if you're a data center engineer and you've done DevOps before, by nature, you have the potential to be a good node operator, and so we're decentralized also. If anyone's listening, come join the revolution.
Thank you very much. I want to just go back on this other string where I didn't give the chance, or we took this question about recruitment, but Brian, I would love if you also responded to what are the steps to add new POS coins and allow them to be staked on Kraken.
Yeah, I feel like the relevant answer would be to say it depends on the level of the quality of the meme associated with your project. But realistically, yeah, like it's a very complex process. We have a lot of things to evaluate before we decide whether or not to list or to provide staking for a certain asset. I think Konstantin and Fabian made some really good points around regulatory status, if there's anything clear about that already from the get-go. A lot of times it can be around fundraising strategies that teams have, because that's scrutinized pretty heavily. And then obviously, since this is a staking as a service panel, it's technical challenge to actually manage those nodes properly and provide high value services for our clients. Some blockchains are just more challenging to support from an engineering outlook. I mean, one of the questions someone asked was whether or not Kraken supports staking through our own internal processes, or if we use third-party staking providers, and the answer is yes, both. We use both, because some of these we can put 1 million coins on one validator node and manage it ourselves, and other times we need a data center of those kinds of things. So it vastly varies, and I think that all of that has to be considered when you decide to provide that service, and we want to make sure that clients get high yield, no slashing, and just really high quality staking services.
Thank you very much for that comprehensive answer. So Konstantin, the next question is to you, and we fairly briefly touched on this already, but when it comes to network security, network custody, and how can we make sure that these networks are decentralized and run in the right territory, in the right way?
Right. Yeah. So there's a term we like to throw around called network custody. Not a great term, confuses people tremendously, but I like the concept, which is because we operate nodes, that's one way how we think about ourselves. Ultimately, we want to protect the protocols by running top quality nodes. And there's, different, and Tegan referred to it. There's different requirements in terms of node infrastructure based on the life cycle of a project, which is why the Ethereum POS launch is so interesting. But very early on, it's probably not a good idea if you're too decentralized, because you need to actually get to a decision to go to mainnet that actually gets made by people. So and an immediate set of rules gets laid down. And so you need to have something to go live. And then over time, you can incorporate more and more people to change and manage the network. But the most efficient mainnet launches we've seen, and I want to obviously, again, there's always Bitcoin, which was a little different, but are the ones where they start from a point of centralization and then move towards decentralization. And that means that the node infrastructure that's required to achieve respective decentralization at the moment in time for a protocol looks different. And so we're an entity that is very good in the beginning and very good at the end. And so we're very good with initial decentralization because we obviously run very high security nodes. They perform really well. We have 24/7 customer support. So when a network launch, that's very helpful because you really want to make sure that the network works, that people can respond quickly to problems. And then we build toolings that we make available to the, initially to exchanges, custodians, other folks, and then ultimately to the community. But there's this intermittent period where we might run a lot of nodes, and that's creates some risk in the network. The way we mitigate it is that we at least try to take other risks off the table. One of them is, as you've referred to correctly, data center point of failures. And so when this is not managed, like Ethereum was always a good example, way back a couple of years ago, it's an argument I loved making, was that like 80% of all the ETH nodes were on AWS East, which is one Amazon data center. And that thing actually goes down once in a while. Data centers can catch fire, there might be stuff going on. And so it creates a single dependency on an individual data center where a geographic event could take out a network. So in the most simple form is because we automate a lot of this hybrid cloud stuff, we can actually move nodes from AWS to Azure to IBM to Google and our own bare metal racks really, really quickly. So we provide failovers across regions and data centers. Now, the risk that comes with it is that we still, as an entity, might control a lot of nodes, but on the pure infrastructure layer, we increase decentralization over time. And so we're very good in this early phase for respective protocols. And I think we're very good in the long tail once our tooling is open and you have a lot of nodes. We don't want to run all nodes, but we want to run the institutional backbone of the network, right? And so, yeah, anyway.
Fantastic, thanks so much. We have some really good questions. We will take them in 5-7 minutes, but as next I would love to ask Tegan that what's on the roadmap for you guys? Like what were the next?
To Artem, what's not on the roadmap? The graph's been launching stuff like crazy.
Shipping. Yeah, we try to constantly ship. Actually, today a really big announcement came out that the dApps, the dApp subgraphs have actually migrated to the decentralized network, the first wave of 10. So query feeds are flowing. So the indexers are all getting to work. I'm sure Konstantin's team is super busy, but that's huge. So GRT, like the dApps have committed to paying for queries in GRT to reduce friction for their users, which is really exciting. And then we have a big product launch coming up in the pipeline within the graph ecosystem to really kind of bring the graph to its full form, which is wild that it's not there yet, but really excited for that.
Congratulations, super exciting times for you, and thanks so much for being here during such busy times. So
totally, thanks for having me.
Pleasure to have you. So I would love to take more of the audience questions, as I said, but maybe as a closing question from my side for each of you, that what is the future of staking as a service, and will we only see now proof of stake coins coming up or out, and Bitcoin will be the only proof of work, or how do you see the field evolving?
I think Bitcoin definitely won as like the largest proof of work blockchain. I think it's great that Bitcoin focuses so much on security. I know the Bitcoin core devs were pushing for Taproot for months and months and months. So they just made sure they, crossed every T and dotted every I. So I think that's great. And then I'm really excited to see Ethereum become one of the largest proof of stake chains. I think that's really exciting for the industry. But I think things will constantly be innovating. I'm sure there'll be many other proof of, fill in the blanks in the future.
Yeah, I think it's likely that Bitcoin will never change its algorithm, just mostly because its main value proposition is that it doesn't really change that often. And I think that it will likely drive a lot of focus and energy on, well, reducing energy consumption and making it more sustainable. We're already seeing that play out. As far as proof of stake algorithms go as well, and from a security perspective, I think if you want to be completely, unbiased and agnostic about the whole idea, it's still yet to be proven if the security model is equivalent to what Bitcoin is doing with proof of work. I think it's still experimental in my mind. And there's a lot of research and development being done in that. And it's exciting to see the growth there, though. So we're cautiously optimistic, and I think there's a lot that's going to be coming down the road. And for us as a business, the future of staking as a service is we're just going to do a hell of a lot more of it.
Cheers to that.
Yeah, for us, as Brian already mentioned before, like the governance aspect is very important, because with Bitcoin Suisse having a large share of the staking market, we want to enable our clients to cast their votes on protocol improvements. And on the question if Bitcoin will be the only non-proof of stake, yeah, it's super hard to predict the future in crypto. Everything is evolving so rapidly, and we are here pretty technology agnostic. When something new comes up, we listen to our clients, what they want, and then we try to build cool products around it. So that's our standpoint there. But yeah.
Thank you so much. Konstantin, you have something to add?
No, I mean, I think that sounds all about right. Lots of innovation. I think it's great that Bitcoin functions as a base layer using a different economical structure that other protocols can connect and stand on ultimately. And so I think that's super exciting. I find it in general super exciting what's going on. I like the whole proof of stake stuff, because ultimately it's how do we manage a community, right? And how do we reward behavior in a community? And how do we use economics to inspire the right behavior? If you think about democracy and where we are as nation states and as a global community, understanding and learning about the efficiencies of these systems is going to be hugely applicable to all sorts of problems in the world. And so I kind of find it like the big thing of like separation of state and money, and the role that cryptocurrencies bring, and how these currencies protect themselves from attacks and influence from huge organizations and governments is going to be of continuous interest. And so we're just starting.
One question, thank you very much for all your answers. One question from Aaron ties nicely into this, because he's asking, do you believe that staking could become a popular hedge against inflation? I think that is already actually happening, or it is a hedge, if you will. And what might happen to a SaaS, as in staking as a service and lending borrowing protocol, once we see a market crash similar of the one in 2008?
I mean, that's a complex question. FYI, I don't know. I mean, probably the other guys might be more suitable to answer it. I like DeFi and derivatives on these chains, because I think it actually will provide a lot of insurance for crashes. And so if you think around derivatives, there's this line, right? Like there's derivatives who insure and provide a lot of protection if it's in balance. But if it's a loop-sided derivative upside network, like it was in 2008, where you had a particular product exposing one particular side of the market to enormous risks, then that can be dangerous. But I think we've had incidents like this happen with Bitcoin in the last 4 weeks, where Bitcoin collapsed 50%, but nobody needed a bailout, you know? And so I don't know, like, I feel like, you know, the crypto community, and we're used to these sort of tough swings as well.
Yeah, I think that the hedge against inflation is crypto. It is these different protocols. So I'm optimistic.
Yeah, I agree. I mean, I think we're already seeing it in some of these countries where they have ridiculous inflation, where it's valuable. You know, I think there is one caveat there. I mean, I think we like sometimes to pretend like crypto is completely independent of traditional markets and the world economy, and that's not always the case. And I think it would be a pretty dramatic hit to the overall industry if there were to be a big crash like that. But as this huge, you know, multi-trillion-dollar market gets bigger and bigger and bigger, that impact becomes less over time. And yeah, you can never go wrong investing in crypto if you're trying to avoid inflation.
Thank you very much. There is a question from Brute relating insurance. Maybe this is mostly for you, Konstantin. That is staking insurance available for all tokens, and what is the approximate insurance cost in percentage terms? Is there a scenario that the insurance does not cover?
Lots of questions. I can tell you how we thought about it when we tried to do our own insurance product, which is ultimately complex risk calculation and likelihood of particular incidents over time. And so the way we've done it mostly is that you need to hold native tokens, because it's impossible to predict the price volatility also when an incident occurs. So I think structurally, the most important part is to keep native tokens and, you know, connect them to the yield earning of the general network, because slashes in general are also tied to the general yield a network earns at. And so it's important that you have a reservoir of tokens. And then, you know, ultimately on the insurance side, we've run our own insurance products for a while. I think the cost is currently, I can't give you a particular percentage amount because I've seen a lot of different models, and a lot of them are actually in hard USD. And so, but USD obviously is also a factor of the different prices affecting the tokens. And so there's two companies who offer institutional insurances as traditional insurance companies we've seen, and you know, they're still very early. And so we like thinking about our own insurance products just because it's fun. But there's always going to be some cap, right? Like legally uncapped liabilities are not something anyone likes, even insurance companies, right? Like, so you can cover certain types of risks. I think you'll never cover 100%.
Thank you for taking this and answering to it. So maybe I will pick two more, and then we come to the end of this fabulous session. So what is the reason why so many custody providers either do not offer staking services, which would be a natural extension of their business offering?
Yeah, I think it will be just a question of time. It's yeah, all the service providers are looking into it, and some of them, like Kraken and ourselves, as platforms where you can trade and stake, looked into it very early, built a team around it, and were very early on it. And some companies put their focus in other areas to improve their service offerings. And yeah, it's just a question of time until every sophisticated service provider in the area of crypto, like an exchange or broker, offers also staking capabilities. and the connected governance aspects of it. Otherwise, I think it's difficult to survive.
Yeah, and I think one big reason also is that it's actually really complicated. And so the rationale why companies like us exist is because we obviously take that away, but we've also had to build our platform and evolve to a level where we can actually work with a custodian and say, hey, here's 20 protocols you can earn, you can offer your customers to stake for at a particular fee. The reason why it's so complicated is because of the slashing component and the nonlinear community-driven innovation in a lot of these projects. You actually need an expert engineer who's in the Discord channels, who's in the community of a respective protocol, in order to really offer a high degree of performance over time. And so the answer isn't like I just call up 5 random engineers and I'm like, yo, can you please spin up 10 Polkadot validators and let's put $1 billion on it and see how it goes. That'll be pretty disastrous for most entities. And so I think you'll find that the node operation and complexities involved in these new networks actually is complex. And a lot of these networks, like the Graph, for example, actually run really extensive test nets pre-launch to onboard node operators, where people run drills and get trained for months and months and months before we go to mainnet. And so for entities that haven't done that or aren't doing that for a living, to start from scratch is actually very difficult, which is why companies like us exist and why we're doing well, is because we abstract that complexity away.
Thank you very much. I will take 2 more questions and then I let you all go. So Thomas Hübner has asked if he could have your LinkedIn's, but I think Thomas, you can totally find all these fine folks on LinkedIn and just send them a DM. If someone is against this, then please let me know, dear panelists. And then I would love to take the first question as the last, because this is an interesting one. So considering that we still have a long way to go to reach global regulation when it comes to staking, how does each company approach staking as a service, be attractive to new clients in specific or specifically traditional banking clients? And Konstantin, you recently closed your Series A. Congratulations to that. And if I'm not mistaken, Goldman was one of the biggest investor.
Yeah, I mean, we did. We're a little bit of a weird venture company, mostly because we're actually hugely profitable, and so we've not raised for a while, mostly because we could handle our organic growth. We're cash flow positive for since last year, and have been growing aggressively. Obviously, the onset of a continuous evolution of the staking world also meant that we're earning more and more over time. So we have an interesting flywheel as a commercial model. And so when we raised money, we weren't really looking for money to kind of run the operations of the company. We were mostly looking for strategic partners that we want to co-develop with. And so Goldman Sachs is one of those entities. It's a strategic investment for them. And I think it's actually a huge deal because we're the first investment they've made into a company that earns a good chunk of their revenue via tokens. And so there were a lot of regulatory hurdles to be crossed. And I think it's really a statement to the intent of Goldman to also offer these type of yields to their customer base over time. Obviously, they have a lot of different interests in the space. They own commercial banks, they have private equity, wealth, trading desks. I mean, there's a whole suite of things they could be doing. And I'd say that Goldman is probably more advanced than most people think in pushing the boundaries there. And so we've always looked for a mix of crypto native and institutional investors. And we try to use our cap table really as a tool to log in partnerships over time. And we found that that works really well. And so we're going to continue on that path. But from our side, I can't even tell you like how much the institutional interest has grown in this particular segment of the market. Frankly, I mean, it's been insane over the last 12 months. I'd say that any large scale financial institution is investigating crypto or running a crypto offering with very serious intent at this point in time.
Absolutely. Can also confirm that from my day job. But Fabian and Brian, would you guys also do you want to chime in here?
Yeah, at Kraken, I think staking is actually a product that I think a lot of, many of our customers don't really understand it. They don't necessarily like understand the nuances of like what yield is, and they're not like full 100% degens, like jumping on the platform. So I think that there still is like a learning curve that we're working through here. And I mean, it's getting better day to day, but I think it only gets better through education, producing really good content for people to better understand these technologies. And it's gotta get much better, much quicker, because there's so many other types of DeFi capabilities that are way more complex and are coming. And we want our customers to kind of evolve with us as the platform grows and learn these things so that they can take advantage of it, and it can truly be an alternative financial suite of tools, rather than have to go and deal with mutual funds and all that stuff. We'd rather them be in our crypto world.
Yeah, many of our clients are very crypto native. They have been for a long time in crypto, and they most of them, or a big chunk of them, invest very large amounts. So they research the field very carefully, and they look very closely into into our staking offering. And the biggest thing in demand is governance features and more staking currencies. That's for sure from our side.
Thank you so much. There are still a few questions which are not answered. We partially touched on these, and if you guys email info@cryptovalley.swiss with this question, we are really happy to get an answer for you from the speakers. I want to be mindful of your time and would love to thank all of you, and I hope you guys are ready for the continuation of this beautiful bull run. And I clap my hands for you, Tegan, for Brian, Konstantin, and Fabian. Thank you so much for being part of this.
Thank you so much.
Thank you.
Thank you.
Thanks so much. It was very interesting and a lot of fun. Thanks.
Bye for now. Have a good one, guys.
Bye, guys.